Hi, I'm Jeffrey Kane of DealBook. I'm here today with my colleague Adrian Carter. It's Tuesday morning in New York, but it's not too early for beer. To talk about beer, SABMiller has offered to buy Foster's. It's the largest brewer in Australia. It would be a deal valued at $10 billion. Adrian, why does SABMiller want Foster's?
Australia is a great market. If you look at the economy, it's growing about 3.4% thanks to the commodities. And the Australian beer market, while declining, actually has really high margins. And so SAB thinks that's the opportunity, declining market share for Foster's, but really high margins. So they think they can jump in there with their resources, with their efficiency, with their scale to really eke out some extra growth there.
All right. Now, Foster's has rejected the offer, saying it undervalues the company. SABMiller saying it's going to press ahead. We had in Australia, on the Australian Stock Exchange, we had the shares of Foster's jump sharply today. What's likely to happen next?
Well, I think what you're seeing here is really the first move, the first offer. And so they're putting it out there, seeing what Foster's will really take and what the market is really expecting here. So you can probably expect SABMiller to jump back in with a higher offer. This is really just the opening bid.
Mm-hmm. Now, in the beer industry, we've seen a number of big deals just in the last few years. Heineken buying FEMSA of Mexico last year, and Australia's number 2 brewer, Lion Nathan, was acquired by Kirin of Japan. That was just a year or 2 years ago. What are the forces that are driving all the consolidation in the industry?
Well, if you look at a lot of places, it can be a really slow growth industry. You've got a lot of margin pressures like commodity prices, the stuff that goes into the beer is getting costlier. And so really size and efficiency matter here. And so what you've seen is sort of this massive wave of global consolidation over the past decade or a bit longer, really reaching its pinnacle a couple of years ago when you saw Anheuser-Busch get bought by InBev. And so what you see is the largest 4 players now make about 50% of the market versus about 20% of it about a decade ago. And so really size matters.
So is it possible that any of those giants might want to jump into the fray here and make their own rival bids for Foster's?
Well, you're seeing speculation that perhaps Asahi could jump in or somebody like Modelo could jump in, but SABMiller has really been the presumed suitor from the beginning. And so even though you're seeing Foster's reject the bid, you could expect them to come back with a higher one.
There's even some talk that SABMiller is doing this bid in an effort to stay independent, that it might become a target of a giant like Anheuser-Busch.
Well, that's a little bit of a tough deal to pull off, right? It's the number 1 and the number 2 player. And so there's also a lot of antitrust concerns. Just here in the United States, if you combine SABMiller with Anheuser-Busch InBev, you're talking about a 75% market share in the U.S. So from an antitrust perspective, they'd have to come up with something, perhaps selling off Miller to do it. So it's a pretty tough, unpalatable deal.
So this is a takeover story that's going to go on for some time. Thank you, Adrian. This is Jeffrey Kane for DealBook.